all you New Yorkers.
This is a phenomenal time to build a book of loans. This is the moment. You're getting paid more to be in at a lower basis. The moment I betray someone else's confidence to you, you know you're not special. I mean, you're special, very special. But, you know, I told you someone else's secret. I might be telling someone else your secret.
Right,
so
great.
I don't tell anyone anyone's secrets because that's the end of my business. You can't sell it. If you bought it in a 1031 exchange, you can't give the keys back. You've got a huge tax liability hanging over you if you got carried zero basis into that transaction. And we just have this big boogeyman hanging out there over all the banks.
Andrew Dansker, welcome. We usually say cheers.
Cheers.
But it's weird with coffees.
That's all right.
Cheers to you.
Cheers.
Cheers, Mitchell. Doesn't even have a coffee. Andrew, thanks for coming in.
Thanks for having me.
Before we get started, I just want to say that you're always somebody I feel like who combines being very intellectual and intelligent, but also being very likable. And anytime I bump into you at events, always have great conversations. Always appreciate hearing your thoughts, not only on the market, but also on growing a team and growing a business. So,
Really kind of you.
yeah, so thank you for all that.
No pressure, right?
No pressure,
sure.
yeah. We're May 2024 recording this. Where have we been so far this year, and where do you think we're going from a lending perspective?
Oh, that's your question. So, okay, sure. Yeah.
Yeah.
Okay, yeah. So you said we have 3 hours or 4 hours?
A softball.
Yeah, that's right. Everything's great. And yeah. Where have we been and where are we going? That's a great question, and it's a deep question. I think that so far this year, where we've been is a scary place. I think that it's scary not because we're talking about rates, right? I mean, the rates are a problem. And I think the entire industry is focused on the rates, right? Ooh, are they going to go up? Are they going to go down? Are they going to stay the same? I mean, if the Fed makes two moves this year, in the remaining part of the year, and the rates move down 50 bips, does your business change dramatically? I don't think mine does, right? So, I mean, it's about the rates, but I think the thing that's been on my mind more so has been capital availability. And that's where I feel very concerned, especially in New York, right? You guys are focused on New York. My business is national. We do work all over the place. But especially in New York, who's lending? Which lenders are interested in funding a 20-unit rent-stabilized building in Queens?
Yep.
Or even a free market building? Because that may be just as scary at the moment, right? Do we have the paperwork in order, et cetera? What's the value? Forget for a second the issues of, do the loans figure on a rollover now that the rates have increased so much? The DSCR covenants, the debt service coverage ratio covenants are so out of whack. Expenses have gone up because of inflation, so the numbers don't work great on the refi. But forget that for a second. Who are the banks that you can name that you see coming to the table interested in lending? It's a very small number. And that, to me, is the scary part, not just about where we are, but where we're going. We know NYCB's out of the picture at the moment. We know Signature and First Republic are out of the picture at the moment. Forever. Webster hasn't been lending. Investors is gone. They were gobbled up. Capital One left the market a while ago. You start to whittle down the list of people who used to be the go-to candidates for that kind of work starts to get very thin. And that's concerning.
Are you seeing any new lenders enter the market or trying to enter the New York market?
That's really interesting to me because I think, when we think about the other half of your question, where are we going, is, that sounds very ominous, what I just said, right? Well, what happens as these loans roll over, when there's more activity, there's more demand on capital? What's going to happen next? One possible answer is there's no capital available. Spreads widen out because there's so little competition. there's another side to that equation, which is other people see the spreads widening, see an opportunity to gobble up some market share, and we have a whole new class of entrants into the New York market, which is, I think, what we should all be hoping for. I agree with you.
We were having lunch the other week with a big investor that had 2,000 units under contract, and he was saying exactly what you're saying. They're out in the market looking for financing. It's very quiet.
What's his phone number?
They got a lot.
You've definitely called him, and he's called you.
Yeah, you know. So yeah,
it's quiet.
And so the banks don't want to lend because they're concerned about the paperwork and where rates are going.
I think there's a variety of issues. Okay, I think one is everyone's concerned about values. Where are the values? We're not sure. Number two, everyone's concerned about their exposure, right? How much real estate exposure do you have? What are your capital ratios? Number three, nobody's getting payoffs because nobody's selling and nobody's refinancing. So you don't have that flow of capital coming in to be relent out.
Interesting, yeah.
On top of that, because of the concerns about values and about maturity defaults, et cetera, you have increased loan loss reserves. So capital that is coming in is being put aside for reserves, right? So it's further siphoning off lendable capital. A lot of lenders have capital set aside in fixed rate securities, bonds. They can't sell those because if they're marked to market by being classified as held for sale as opposed to held for maturity, their whole portfolio is underwater, right? And so it screws up the balance sheet. So you can't go tap that liquidity, as that's SVB right there in a nutshell. So there's a range of problems that are constraining the capital, other than simply is the paperwork in order? Do we have any liabilities here? Which is a concern, but is one of several constraints.
Exposure is something you hit on there. So our bank's saying that commercial real estate, we have enough
absolutely
chips laid out in commercial real estate. We just want to move on to other things right now. And
totally.
Yeah.
Yep.
Yeah.
I think there's a general unease and a desire to see how things play out. And I think a lot of lenders are looking at, let's do some C&I lending, some business lending. Let's do some other fee-based businesses.
Diversify our own.
Yeah. Let's lose a little from attrition. But the rate of attrition is so low that from the loan book that even trying to lend less than the attrition rate, it's almost impossible because the attrition rate is almost nothing. Right?
Go ahead, Mitch. Sorry.
I remember back in COVID, you were seeing a lot of banks kick the can down the road. A lot of workouts with their current borrowers, and I feel like note sales have been talked about for years now. You're not necessarily seeing a lot of them. We just got hired in the building, but we're not selling the note; we're selling the fee position, but the lender took it back. Does your shop sell notes, and are you doing a lot of them, and are you seeing a lot of them? Are you hearing?
We don't sell any notes. We get asked about selling notes all the time.
Yeah, sure. Yeah.
It seems like there's a major supply-demand imbalance on note sales. Everyone wants notes at 80% off.
Yeah.
Which is not a real thing that I've seen. Maybe that is a real thing for other people. I do know that banks have been trying to unload some paper and sell to each other or sell to others, but I don't think anyone's yet in the mood to take such massive discounts. Maybe that is happening behind the scenes. I'm not in that world. But what you said about kicking the can is definitely happening. There's a lot of post-maturity payment plans happening, right? And I think you've seen that. I've seen that written about recently. I was reading something, I want to say it was the Wall Street Journal, but I don't remember, in the last week or so, that said there's almost $1 trillion of commercial debt coming due this year, in part because of all the loans from the last 24 months that have been given extensions. Right, so the number of maturities is just getting inflated and inflated and inflated.
Yeah,
because everyone's kicking the can because the numbers don't work.
Interesting.
Why do buyers want to buy notes so badly?
I think everyone imagines that it's a less expensive way to get at the underlying asset, which may be true. But if you have a savvy seller on the other side of the note, maybe it's not true.
This is very time consuming, right? Kind of take years to get to that real estate, go through all the judicial process.
It's not my specialty, but my understanding is that the answer to your question is potentially yes.
So if we're looking at 2024, do you think if you had a capital event coming up at the end of 2024,
I would expedite the process. For anyone who's listening who has a capital event coming at the end of 24, you should be doing that now. It doesn't matter if you have a prepayment penalty, you should be doing it now. And I'll give you a good example. I was working on a transaction recently in Brooklyn for a client. It's a tricky deal. And I said to the client, I have one available option. I know what I'm doing. I've spoken to everybody. There's one person who will do this. And he said, I'm not thrilled with the terms. I think maybe I could do better. And I said, I just want to be clear with you that the environment is deteriorating. You should take this. I know I sound self-interested. I'm a broker. No one believes me when I say that. You should definitely take this. There's nobody out there. 30 days later, you know where this is going. He's come back to me. I've discovered that you were right. I'd love to take the deal. Okay, great. I went back to the lender. We're no longer doing commercial real estate loans this year. Closed for business. That's scary. And of course, so now he and I are looking at a bridge loan, right? His interest rate just went up by about 35%. His term went from 5 years to 24 months. His points went from half to 3. Really expensive 30-day look around he did. And the bank's closed. I mean, they're not closed. They're not going to put that in the newspaper, but they're not lending.
I feel like it's always a constant battle between fear versus greed, you know, with all these owners. It reminds me of a similar story. I was selling a piece of land in the Bronx before the last 421A expired. And there was a great offer on the table. It was about $1 million of where they wanted to be. Then now, obviously, the 421A lapsed, and obviously the land's worth 30-40% less. Now there's new programs, so it's going to be interesting to see what the land price is going to be. But the owner confessed to me they wish they sold at that point. So
yeah.
But they didn't trust you.
No.
Or that guy didn't trust you. So it's
the
human
truth.
nature, right?
It's my failure as a broker not to have won his trust. I mean, I take responsibility for that.
You can't win his trust until you put in the time and effort, and until you give him a piece of advice he doesn't take, and then he gets hurt. So I assume that the longer term relationships that how long you've been in the business?
It's almost 15 years.
So the guy that you met or talked to 10 plus years ago, he's probably jumping straight in based on what you tell him.
I think some of those relationships are more open to the idea. I still think, up until very recently, a lot of people were saying to me, the Fed's probably going to lower the rate significantly in the near term. I want to wait till the back half of the year. And the argument I've been making since January 1st is we were talking about the wrong thing. If the Fed lowers the rate and the bank is closed, it doesn't matter how much they lowered the rate, right? Or if there are fewer competitors and the spreads widen because there's no liquidity in the market, it doesn't matter that the rate went down. You're still going to be paying the same or more, or can't get a loan at all. And there's just been a very intense focus on rate watching and rate predicting that I think has inhibited some people from really getting in tune with the capital availability issue.
And rates don't have to go down, right? They don't have to. I feel like we all feel that because they went up, they have to come down.
Oh, they don't have to go down.
What's to stop them from
They may go
going
up
to 10?
That's a possible outcome. That's
probable or possible?
I think there are a lot of people who are a lot smarter than me who are placing bets on that. I mean, I think since the last few readings on inflation, other than the last jobs report that came out, there are more people talking about maybe it's just a pause for the rest of the year, and maybe even it's an increase. That hasn't been on the table, at least in terms of the conversation, for a long time, a year, 2 years. I mean, I feel like it was the day the rates went up in early 22, March, whatever it was, April 22.
2022, yeah.
Yeah. Since the day the rates went up, everybody was saying, well, they're going to be coming back down soon, right? I mean, that spring, it was like by the end of the summer, it'll be under control, rates will be back down.
Yeah.
Here we are 2 years later. Right.
Yeah.
And even in the beginning of this year, that was the conversation. They'll be coming down imminently. I'm going to wait. And I think the picture on the bank side is getting worse. And so I'm worried. I would be worried about, is there going to be money available for me to do a deal? Not, is it going to be up or down 50 bips? Because it's not like we're going down 4 points if it goes down this year.
It's going to be the way it went up. It's going to be gradual, right? It's going to be 25 bips.
Right. See how it's going, see what's happening.
Jay Powell, I read, is finished in January of 2025, and he's really going to be not wanting to rock the boat during the remainder of his tenure. So who knows? But most people are saying it's probably going to be just continue as we are for.
And there's an election, right? So
And there's an election, which is the worst.
There's an election coming? I didn't read about that.
Who's running for
Who's
election?
running again?
No political talk on that. I was actually watching a video of Barry Sterling the other night. He was talking about the exact same conversation. And,
Barry, good friend of the podcast.
great guy. And he was just saying commenting how he was very critical of how quickly they increased the rates and where they're going from now, not necessarily going down. So just interesting.
I mean, who am I to say? I don't know. There's a lot of people thinking about a lot of factors that are above my pay grade. Where I'm concerned is, what do you do if you own a building that you financed at 4.5%? Your expenses have gone up. Your rate, your income's been capped, and now the rate on the refi is, let's say it's double. What do? You can't sell it. If you bought it in a 1031 exchange, you can't give the keys back. You got a huge tax liability hanging over you if you carried zero basis into that transaction. So how does that get worked out? I mean, I guess the answer is what you said before. We just keep kicking the can, and we just have this big boogeyman hanging out there over all the banks.
So if the major food groups, multifamily, say retail, and office, if I call you today and I say I have the building you just mentioned, say a 20-unit walk-up in New York City, Andrew, what kind of rate can I expect on my refi?
You could, if you called me today,
you're not going to let us drag you into any.
Yeah, I mean, the answer is going to be different than it was yesterday. By the time this airs, and then someone listens to it, I mean, it's moving so fast and so day to day. I guess the best answer I could give you is it's probably somewhere between the low to mid sixes and the mid sevens.
Okay.
Depending what it is, where it is, and what the last inflation reading was.
Yeah, so call it 6.5% to 7.5%, somewhere in there. But like you said, it's not even a great question because it's so time sensitive.
It's so time sensitive, more than I've ever seen. And not only is it super time sensitive, I've noticed huge spreads.
Yeah.
Sometimes, in the past, it used to be like, okay, this bank is 1/8 of a point cheaper than that bank. We're now in like, okay, this bank's 100 basis points cheaper than that bank.
Yeah.
Right. Real widening of the spectrum as well as the volatility.
And rate, like you said at the outset, is just not really. It's probably not really the most important thing, right? It's actually who is going to lend.
Sure,
right?
Because you just gave me a hypothetical about an apartment building.
Mm-hmm.
You didn't give me a hypothetical about an office building, right? Mm-hmm. That's a bigger problem.
That's a bigger one. Yeah.
You didn't give me a hypothetical about a regional mall.
Mm-hmm.
That's a challenge.
Mm-hmm.
You didn't give me a hypothetical about a piece of land you got to roll over that was done at 60 or 65%, and maybe it was 50%, but now that loan's 70%. There's much bigger problems than 20 units of multifamily.
Right, that's probably the easiest one to size up, right?
Definitely.
It's the office. Definitely, once you go office retail, you start talking about, is there anyone out there?
Yeah. I mean, it used to be the case that you had a menu of options to choose from, and we started by talking about a list of banks that are just not there anymore. Mm-hmm. The menu's getting really short. A lot of the time, this is your option. It's not about whether or not you like it. This is your option.
This is your option.
Right.
Right.
I'm seeing increasing number of situations that are like that. Here's what you can have.
Market-wise, Mitch, anything else we can drill Andrew for before we...
I was curious. So when we're pitching a lot of owners who want to sell their building, they're like, oh, I've already have a buyer on the table. And I assume you have the same equivalent with lenders. I already have a relationship with this bank.
Great question.
So I'm just curious how you lot of sort of... I'm sure you got a great answer.
Yeah.
How you overcome that? You go to the market.
Andrew, I know all the banks.
Yeah.
Why do I need to pay you a fee to go find them?
Yeah.
I have the relationships.
Yeah. I think, two things. One, I think that was more true. And I'm getting a lot more of now, hey, my bank's not lending. I need help. Right. And I'm seeing that question a lot more than I used to. And I used to get that answer a lot more. But my answer is always the same. My answer is, okay, tell me what your bank is doing. I know the market. If you think you can do better than I can, tell me what it is, and I'll tell you if I can. If I can do better, I'll work on it. If I can't, we'll work on the next one. My goal isn't to get the deal. My goal is to add value and become a trusted advisor, right? If you have an ongoing relationship with someone that's doing your stuff at a reasonable rate that's, market appropriate, then you should take it. You call me because that's not working, or it's not happening, or you've hit your cap, or you're trying a new asset, or you're moving to a new geography. So I think it's a little different than your answer, right? But in the buy side case,
Yeah.
but maybe not. I mean, maybe that's the answer. What'd your buyer offer? Because I have a buyer that's 10% more.
Yeah. Well, we always pitch like we think it's in the client's best interest to run a process, and like get the buyers to pay more. So
Right.
we're constantly pitching, and that's how we add value, basically.
Which seems legitimate. I think it's true that there's a little bit of value in creating a competitive process among the banks, but more so, I think it's about information, like knowing really just who to go to begin with. That's going to be the most effective, which is just a little different because my buyer pool is effectively the banks is effectively just a very limited pool.
Yeah, it's particularly recently shrunk, right? So
And
you know
very
who's
much
going to go to. In a better market, when you're running your process and you're trying to find a bank for a particular asset, like in the sales world, would you do like a best and final offer, and how like you pit the banks against each other to get the best rate for your client?
Yeah, it's interesting. I like to keep it pretty tight because at the other end of the spectrum is a professional. I mean, the other end of the conversation is a professional
Yeah.
with whom I'm a repeat player,
Yes.
right? So I can't abuse them
Yeah. Yes. Yeah.
for the sake of squeezing 5 bips out, right? That's not appropriate for anyone involved in terms of my relationship with them, or even for the buyer's eventual or owner's eventual relationship with that lender, right? They want to be on good terms as well. So I try and keep the process pretty tight to who I know is going to be competitive to begin with, and give everyone a fair shot at being the best.
Everyone to feel like they've won.
Yeah.
They came away with
Right.
what they wanted from the transaction.
Yeah, I mean, so it's kind of a best and final type process of like, hey, listen, this is where I think we're going to end up. If you want to beat that, this is your deal. If you don't, like, totally
Yeah,
fine. But that's what I think I can do. So if you're not there, we're not going to get there.
We can relate to that with buyers we work with.
Have you seen the buyer pool change dramatically?
Similar to the banks, I think we've seen it really thin out.
Yeah.
So
Yeah.
when we used to list the building, you could be guaranteed that there was going to be, call it 10 to 15 tours in the first couple of weeks,
Right.
and there would be the same, half dozen to a dozen buyers that you could be guaranteed offers from.
Right.
But now they've put down their tools and they're just saying, we think there's more to go, or there's more distress coming, or some version of that story,
Right.
or there's a new president coming, or there's something going to change. And I think just what it all means is just we're really uncertain about where things are, and we're afraid, and we also don't know if there's going to be a bank to give us the money to do anything. So we're just kind of,
Have you seen financing start to come up as a hurdle to execution?
yes.
Yeah, I think a lot of the deals that are getting executed are smaller deals where
Yeah.
they might be buying all cash, so
Yeah.
they're agnostic to the interest rates. But I also think it depends on the asset type. Like, for example, rent stabilized products, tough to find buyers, and they feel like it's coming down, and they know they have a lot of leverage. But if it's land, particularly if there's no abatement, I feel like you're going to have developers fighting against each other.
And you also need a very well-informed seller to get through this, because
Yeah.
it's a lot of heartache to take on to get it over the finish line.
Yeah.
And sometimes it's really hard. I think for me, if I was a seller, it would be so difficult to look at a price tag that is different from where it was several years ago. And it also is very difficult to follow our lead sometimes and say, don't take the highest number here today on paper, because that person hasn't proven that they're qualified to take down the building.
Right.
And it's a long, dark, painful road to wait 30, 60 days to find out that the person can't execute or doesn't have the resources to do it. And then you go back to the sure bet who was maybe 10% below, but knows the deal is going to come back to them. And unfortunately, or fortunately for them, they're a professional buyer.
Right.
So they've got guys like me calling them every day, and they know the deal is coming to them. And they say, okay, well, the price I was at that was not good enough 60 days ago. Guess what? It's got worse.
Right.
And now we're dealing with a very frustrated seller because they've already started planning to sell the building. Brian, what happened to the offer? They said they were going to pay it. I was like,
Right.
unfortunately, people can say anything they want.
Right.
And that's why it really is the relationship right now with the seller. There has to be a ton of goodwill. They really have to trust you, because you're going to be telling them information and you're going to be telling them details that are going to be painful to hear. And
Yeah.
it's all perspective. It's just business. It's just money, but it is painful. Especially, I can think of one example where it was in the family for 100 years. It was probably the case study for listing when interest rates were just changing. And the situation unfolded every month, and we went through every potential buyer, and ultimately it came to somebody who was there from the very get-go, who was very qualified, and who we move forward with. So
Yeah.
that I think we're all going through that process together. And right now, I'm telling sellers, you really have to look beyond numbers as much as possible within reason, and really put a preference on execution.
We're having a similar conversation about banks, right? Where, we're saying to people, okay, we've dug up this bank that no one's ever heard of, and they have availability of capital, and they're cheaper. But there might be a reason their capital is still available for this, and we should be concerned about that. And not concerned like don't do the deal, but concerned like the terms might change in the middle. The credit committee might wipe some, money off the table.
Or retrade the interest rate
Absolutely.
closing. And typically that's bank in the example. Would they be like out of state? Like say they're across the country, how would they know about New York market?
Well, I do that work everywhere, so I'm encountering that problem everywhere. That's not a New York bank problem.
Okay.
That's just a general part of where we are right now. You get to loan committee, and maybe it was what it was supposed to be, and maybe it's not. I think most of the work getting done in New York is being done by New Yorkers because everyone else is concerned about New York, right? Or scared away, right? This is not like a dip your toe in the water kind of market. I do think there's a great opportunity for someone with a national presence who doesn't have a New York presence to go build a nice book of business, right? I mean, you guys tell me, you would know better than me, how much are asset values down for multifamily generally across the board?
30%, 40%.
Okay. So people were making loans essentially at 100% of current value 2 years ago. So now, not only because the interest rates are higher, so your LTV is lower, but the price is lower. So you can be in at, let's say, 60% of that, 70% of what it was, right? To me, you're in at 40% of the value it was 24 months ago in a healthier cycle. This is a phenomenal time to build a book of loans. This is the moment. You're getting paid more to be in at a lower basis.
It does seem like a good opportunity when you describe that for a bank to come in and the fresh perspective.
Well, if you want to blast that out to the internet and see, I'll put my number, scroll across the bottom of the screen.
Give us a referral.
It feels like every deal we've been working on recently, like it all comes down to sort of timing and momentum.
Yeah.
That's the key sort of word of sticking. But it's tricky to get them done. You've got to be at the right time, right place, find the right buyer, and it's why less transactions are happening.
Yeah, it's got a very hole-in-one kind of feeling to it.
Exactly.
Yeah.
Can we switch gears and talk about building a business? Because
Sure.
you are one of the few guys out there right now who was it before COVID or after COVID?
Just before, 60 days.
So your timing was impeccable.
Thank you.
And but you went for it. So you and I met at Marcus & Millichap. You were already building a team there. And it sounds like you saw a gap in the market maybe for going out on your own. How has that process been? And I know you've got kids and a family and all that, so I know you're probably burning it on both ends.
Yeah, the thing about kids that's tough is legally I have to feed them at least once a week, and that's expensive.
It is,
So that's
there's an emotional connection there.
yeah, I feel that. That's so to be understood. So yeah, my timing was impeccable. I opened my doors mid-January of 2020.
Wow, you didn't see COVID coming?
I failed to see around that corner.
Yeah.
Yeah, I opened the doors. I thought, okay, I've been doing this a long time. If my business drops to half, I can still cover my expenses. So let's just, we're going to give it a shot. And then the business went to zero. About 60 days later, all the banks shut down and said, we're going to put our pencils down for now.
And you thought you were being conservative with 50%.
I thought I was being conservative with 50%. It was 100%, which, it was what it was. I mean, I feel very grateful that a couple things happened. Number one, my team stuck with me. And number two, my friends and family were healthy in a time when a lot of people were severely affected, way more than losing business. You know? So I'm very grateful for that. And I don't spend a lot of time thinking about it. And even at the time, I thought this will pass. We'll get out of here. And we did. And slowly, we got back to work. It was hard. We worked remotely for a long time. I went for a long, long period of time without seeing the team. I did some remote hiring. We worked entirely by ourselves for a long time. It's very hard. I think in general to be a broker, you guys have this job so you understand and have the energy to pursue business, right? That's hard to go out, make the calls, meet people, see, do things. It's very hard when you aren't making money and don't have business to drum up that energy. It's even harder when you're sitting in a room by yourself. One of my brokers worked from his wife's childhood bedroom. I was working from a spare room. Different people are, someone's in a closet, it's
Sophisticated
ridiculous, right?
operation.
Yeah, exactly.
Yeah.
But to have the presence and the energy to then go out and win business in that
Yes.
condition,
Put your best foot forward.
it's very hard.
Yeah.
It's very hard. So I'm very grateful for what the team did during that time. We were successful in getting through it and getting back up into production. And then since then, we've been growing. It's, again, not the best time to be doing that in our business, but we see an opportunity. You're right. I think that the country is underserved by a professional middle market national mortgage brokerage. I think you've got regionals that are pretty good. And you've got one-offs that are pretty good. You don't really have a lot of nationals that operate in the airspace where I am. You have a lot of people on the institutional size. So I've been working to build that. We opened in South Carolina a year ago.
Oh, I didn't know that.
Yep, we've got
Nice.
3 agents in Charleston, focused on the Southeast. They're doing a great job. I've got 1 agent up in Connecticut looking north into New England, and I have an office up there where we do a lot of our loan processing. We're opening Miami in the third quarter. We have an agent
congrats.
committed.
Amazing.
Yeah, an agent committed from New York who's moving, and we'll build around him down there. And so we're continuing to plant flags in other places.
Yeah. Yeah. So your model sounds like you're going to wrap your arms around the country, and you're putting lieutenants or generals on the ground to plant flags, as you say. And then do you have, I guess one question I'm always curious about with people who start their own business, do you have the finish line in mind, or are you seeing opportunities and taking them as they come?
Yeah, it's a good question. I don't have a real finish line in mind. Um, I definitely see things that I want for the benefit of the team as it is, which involves additional scale. What I mean by that is I think there's value in scale. And even today, being present in the Southeast, when I see opportunities in New York that are in the Southeast, I have a deeper reach of local connections to not just on the lending side, but on all sides of the transaction, appraisers, legal community, other things that come into play. And I want to deepen that footprint, or expand that footprint and deepen those roots to benefit the nucleus in New York and to benefit all those other people also. So I look at the growth kind of almost backwards in relation to where we are as opposed to forwards in terms of where we want to go. I don't know if that's a great answer, but
No, it is.
I'm really thinking about, like, I want to be present in Florida. I do a lot of work in Florida. I want more presence in Florida. I want more banks I've never dealt with to come onto the radar. I want more local clients to supplement, the New Yorkers that do business down there and build a bigger presence there with the lenders. So then I have more weight, et cetera. Um, that's how I think about it. But I'll let you know when I'm ready to make a tender offer for Cushman& Wakefield.
I'm curious, even with our small team, it's challenging to balance being the broker and managing the team at the same time.
So hard, yeah.
So
Yeah.
how do you manage that? Like, so obviously you're still working your own book of business and you're
Yeah.
a big company.
Yes, that's right. That's
so
right.
How do you go about balancing that, and anything tips you've learned along the way about executing that?
Yeah, it's tough. One of the things that really I've focused on for a while now, I had a mentor. I got out of law school. I went to work for an owner who became a mentor of mine, and I really looked up to this guy. He did an incredible job. He grew up with no resources and didn't go to college. And by the time I worked for him, he had made a couple $100 million. He did a really good job, and he worked all the time, always working. And shortly after I left working for him, it was probably about maybe it was about 2, 3 years. We were very close friends. We stayed in touch, and he died of a heart attack at age 49. And that, besides obviously being very sad for my friend and his family, really changed my trajectory and my thinking about how I was working and how I was living my life. At the time, I worked 6 days a week, um, 10 to 14 hours a day, depending on events and how those things stacked up. But often going to a breakfast event in the morning, working all day, evening event at night, go home, take the suit off, go to sleep, wake up, put the suit back on, do it over again. Sunday was like a slow day where I would only work maybe 8 hours. Um, and that experience, his experience, my experience of seeing his experience, changed my perspective a lot. And it made me think, okay, maybe I would take 50 million and just slow down a little, you know? But seriously, I don't need to get to infinity. More is not the answer, that there's a balance that I need to seek out in life. Um, and that caused me to think about my time differently in a way that I always thought of it as sort of infinitely expandable, almost the way you think of your health when you're young, as if you're lucky, right? That you're invincible. And I started to think about the fact the week has 168 hours in it. There's someone who's running American Express and General Motors, and they have 168 hours. And I'm running this little tiny, at the time, my own book of business with 168 hours. I could do more with less. I don't need to be here 6 days a week. I need to be more efficient. I need to find ways to leverage my time to do a better job. And because there's always a boundary, right? And you're just bumping up against the natural boundary. So create an artificial boundary and start to compress it, right? And that's how I started to think about it. And that thought process for me has continued and expanded as I've started to run a bigger business. And I have a lot of responsibilities other than running my book and my clients. Um, and what I've discovered is, the task kind of swells to fit the available time, right? So if I need to bring in the same amount of revenue, but I no longer am going to give myself 6 days a week, I gave myself five, and I still did it, right? And then, I got married, I had kids, and I thought, okay, I'm going to go home for dinner. And I had a little less time, and I still did it. And the team started to grow. I had more management responsibilities, and I still did it. And essentially, for me, the thought has been to focus on how do I become more and more and more efficient? Because it is almost infinitely possible to be more efficient with the time that I do have, right? And then that will enable me to do more. Because there are a lot of people who have 168 hours, just like I do, who do a lot more than I do. I run this tiny little brokerage with 30 people in it. I'm not running a 3,000 person global business.
That's a great answer. Talking about efficiency, yeah, like you compare like that to like Elon Musk and how much he gets done.
Right.
It's incredible.
That's right.
Talking about like it sounds like you spend a lot of time building out your operations, your systems, and something me and Brian spoke about recently as well. It's like efficiency is so important because you can be busy doing nothing. And I've been guilty of that in the past when starting out. So
And I'm still guilty of that.
yeah,
I've got room to do better. And I intend to. I intend to continue to grow my business and to grow my business.
What are some tools you're using to help with your efficiency and getting through everything you need to do and the work there?
Um, One of the things that I think has been critical for me has been trusting other people and being really okay with the fact that other people do things differently than I do. Genuinely okay with it. And that just because something didn't work out well doesn't mean that that was because it wasn't done my way. Um, or that just because someone made a mistake that I can't give them more and trust them and continue to work with them, right? Because I also make mistakes. And To me, it's not a piece of software. It's really a mindset about how do you delegate and trust and collaborate. Because I'm a big believer that as a team, we can accomplish way more than any of us can accomplish individually. Um, which is why I've built a big team. A lot of people in my position leave a brokerage and go solo and just crank out the deals, and that's their thing, right? And I've chosen to do the opposite. I've very consciously made a different choice. Um, and there's no way I could do the same amount of loans that I did myself while also now managing 29 other people, unless I was able to say to someone, here's exactly what I need, here's what I expect, and say it clearly in a way that they understand and can deliver. Here's the timeline in which I expect that, um, and create a relationship in which they can come to me with a problem, but aren't going to come to me as a crutch. That I can trust them and be okay with letting go and saying, I'm going to give you till Wednesday, and I'm just going to relax and not relax, but do something else.
Get out of your way.
And get out of your way.
Yeah.
And not be asking you, how are you going to do it? When are you going to do it? Why are you going to do it?
That's not really helping them either.
It's not helping them at all.
Yeah.
It's helping me feel better.
Yeah.
Right?
Yeah.
So that to me is the biggest asset in terms of efficiency. Whether or not I use, Gmail or Outlook or that's not.
Yeah. So it's more if people are going to help you achieve your goals and not.
Yeah.
If they choose to use those tools, great. But it's more of you seem like you're very much people first.
Yeah.
And let them run whatever way they're most comfortable with to get the
Absolutely.
job done. Yeah.
If the jobs I think some people are just people who get things done.
Yeah.
I don't know if you ever noticed this.
Yeah.
Some people, you give them something, it won't get done no matter what. They could have all day to do it.
Yeah.
And they'll do 5 other things. The thing that needed to get done will not get done.
Yeah.
Some people, you give them 20 things, they have time for 10, somehow they still get through 19.
Yeah.
Right? And I don't need to tell that person how to do it, what order. They don't need to tell me, just here. You know? And I think recognizing that skill set and trusting it has been the most critical thing for me. In terms of being able to be efficient. Because if I don't have to do every piece, I can do more, right? And then I can focus my mental energy and my strategy on, okay, here's the whole menu of things I do. What can I give away? Okay, here, you take this piece. Now I'm going to do this higher value piece. Okay, now I got a whole collection of things. Okay, now what's the lowest value thing I can give away from here? Okay, give that away. Okay, now I've got a higher value collection, and expand to always be filling a higher value bucket is essentially creating a dollars per hour efficiency, right? It's not efficiency of tasks, it's efficiency of dollars.
That takes a lot of introspection as well.
Yeah.
That takes a lot of smoking the pipe on the weekend, staring into the fire.
I feel like my mind's expanding as we speak. I appreciate you being here. And a genuine comment, I've seen a lot of your troops at events, and it seems like a very happy camp. And I'm saying that genuinely, not just because you're here. And
and
they just seem happy.
Them, right?
And they seem happy to be associated with you.
I'm happy to be associated with them.
And I believe you, and that's why it works so well, and that's why you guys are doing a great job. I think I saw you speak at a panel not too long ago, and not going back to business too quickly, but the guys did 150 deals, was it last year? That's impressive. Yeah. Impressive number. So, congrats.
Thank you.
And you now have brokers in their own rights, right? So you've Andrew Marcus, you've Andy Weiss, Matt Michelson, and we're meeting some of your younger folks like Joy Neiman, Stephanie Wilson. We're seeing your folks out there. So now it's not just Andrew Dansker. Right. You also have people who have real businesses, and are
good brokers,
and are great brokers, and also doing a great job for your brand.
That's right.
Right. So I think you're obviously selecting the right people.
Appreciate that.
You're giving them enough leeway to go and be great and produce.
That's right.
And we're seeing the fruits of that.
Yeah, I appreciate you guys saying that. That means a lot to me. I feel that the best asset I have, perhaps if you look at the balance sheet on the business, the only asset I have is the people in it, right? And I believe what I said about doing more as a group, right? Their good work improves the brand. My good work of building the systems behind the scenes improves their ability to go do good work. Those things all go together. And I think that's really a great feeling when you're surrounded by people who are happy to be there and want to keep growing together.
So when are you adding investment sales to your business?
I'm not adding investment sales. No offense to you guys. Great business. A lot of our business is built around servicing investment sales brokers, right? You guys have in-house debt. You were at Marcus, you had in-house debt. A lot of people don't have in-house debt. or have in-house debt that won't work on their size transactions. We get a lot of business from people in shops whose in-house people will only do 20, 30 million plus, right? And they've got a $5 million Walgreens deal. For me, that's easy business. For them, it's untouchable. So we can collaborate, right? So a lot of our business is built around servicing sales brokers, and that's where a lot of our clients come from. So I will never build out that business.
You have to be Switzerland as well, don't you? Because you want
Absolutely.
IPRG to call you, you want Marcus and Millichap, you want Ribco,
That's right.
you want everybody to think that you're a safe space for them
Yeah.
to come and confide.
And that's true. I do business with everyone you just named and more, who are all competing with each other. Sometimes I get leads from the same person. I mean, the same lead from different people. I pay both people, and I don't tell them about
Oh,
each other.
that's a fun trick.
Yeah.
Yeah.
Because, look, the moment I betray someone else's confidence to you, you're not special. I mean, you're special,
Very special.
but you're not special.
Right.
I told you someone else's secret. I might be telling someone else your secret,
Right.
right?
Right.
So I don't tell anyone anyone's secrets because that's the end of my business, right? And I've always taken that seriously. Even when we were working together, I was working with competing teams who in the office were at each other's throats, but were both sending me business, and I was handling both of their stuff. The only way I can do that is if everyone knows. Once it comes to me, it's a lockbox. And yeah, I take that really seriously because that's the only way that works.
Smart. Smart.
Yeah, we were speaking before you came on, and you seem to have a good relationship, as you just mentioned, with lots of different brokers, and that's great. You've built the trust and relationship over the time for them to trust you with their business.
Yeah, I
Um,
feel very grateful. I have a lot of great brokerage partners. Yeah. I think a lot of people have seen, especially right now, you guys said it, the debt is usually more than half the money,
Mm-hmm.
right? And you guys get your contract signed up. It's kind of a black box, right? You need someone on the other side telling
yeah,
you, hey, start prepping the seller to accept a bigger deposit in exchange for an extra 2 weeks because we're not going to make it, right? If you know that in advance, your ability to manage the situation, close your deal, get your paycheck is so much better. It's just like having a partner in the deal who's just seeing it from another side, right? Or even in terms of buyers. We have a great broker in Philadelphia that sends a lot of business to our office. And that relationship started because he was introduced to us by a client on an office deal in Rhode Island. And he said, I have a buyer, and the client wants me to, introduce you to the buyer because they use you for debt, etc. And I spoke to the buyer, and he said, yeah, I'm planning to borrow 85% of the purchase price or something ridiculous. And I called the broker and I said, this is going to blow up on you. And it did. And he was like, wow, having that heads up really salvaged my relationship with the seller.
Mm-hmm. Credibility.
Right. Which he had worked years to build that. So it has a lot of value.
Mm-hmm.
So that's great. It's great to have those partnerships. I'm very grateful for them.
Mm-hmm. Mm-hmm.
one word you mentioned earlier was specialty.
Mm-hmm.
I feel like the world's very specialized. You have a lot of brokers at your shop. Do you have one that specializes in ground up construction, one in like asset type? How do you manage that and break that up? Obviously, a lot of investment sales brokers special focus by geography.
Mm-hmm.
We've debated at recent times whether that makes sense or not, or asset type. But I'm curious to know your thoughts and perspective on that.
Yeah. So I have two thoughts on that because a lot of people do exactly what you said. I agree. We've decided and it's working so far, to have no limits. You have no geography. You have no client base. You go do what you need to do to go win business wherever it is. Now, obviously, people tend to concentrate in a certain area just to build familiarity and track record and have the ripples in the pond overlap each other and all that. Um, but we've been able to make that work because everybody plays nice, which is not a
That's
normal.
key. Yeah.
That's not a normal thing in a
Yeah.
brokerage, but it's critical. And people bump into each other. Hey, I got this deal from the client's lawyer. Well, I got it from the sales broker. Well, now what do we do, right? Everyone plays nice. We split it. You already know the person. You take it, and as long as that ethos persists, I think we can continue to have an open shop like that. With regard to the product, what I think is interesting for us in particular is we conceive of what we're selling as information. right? Really, if you boiled it all the way down, people call me when they can't answer the question of how do I optimize my financing here or how do I even get financing here? And I answer that question for them, right? And that's what my brokers are doing too. It's really information. Um, like you said, if I have a great relationship with a big lender in New York, you're not calling me to go finance another apartment building in New York. You're going back to your lender. You're calling me when you buy the first one in Philly, or you start doing retail, or you buy a rehab job and they don't do vacant, right? That's what I'm getting the call for. It's information. So the way that we understand our function informs our culture, which is entirely a culture of collaboration. We have a running WhatsApp channel with every broker in it throwing out there, hey, I'm working on this. What have you guys seen? Hey, I'm working on this. What have you guys seen? And answers coming back, right? I've seen other shops where those answers are intentionally obscured in the internal paperwork to make sure no one calls, my proprietary relationship. We're doing the opposite. We're putting it out there over and over and over, right? And so what that does in terms of the client service is when you call me, you're not getting my track record, right? You're getting me and all the other brokers in the room who are working on deals. So you're getting insight into hundreds of deals at once. So I don't feel like I need to become a specialist in gas stations in the Carolinas, right? Because I know there are other people in the room doing gas stations in the Carolinas. So when you say to me, I need to do gas station in the Carolina, I'm talking to them. And I'm saying, hey, what have you guys seen recently? What did you get on that deal in Aiken? What did you get on that deal in Columbia? What were the quotes in Greenville? Okay, now I'm coming back and I'm going to say, here's what we can do, right? So that informs this kind of both strategic choice about we don't have to specialize because we're sharing, and also the cultural choice about being a collaborative office because, again, sort of on the theme of everyone's success kind of leading to everyone's success, everyone knows that by creating that shop where that's happening, each person is enabled to go get more business than they could ever get otherwise, right?
It's what you're describing is like a value add system.
Yeah,
that's what it is.
That's right. That's right.
Yeah, don't bring me in if I don't have value.
Exactly, yeah.
Don't feel like you have to, just because I'm in a certain area, you have to come to me. I mean, let the best people be on the field at all times.
And a decent person won't want to be involved unless they feel out value. Like,
right.
Like what goes around comes around.
Yeah. And my team's not like dipping into each other's pockets just because I told you which lender to call.
Yeah.
You know what I mean? Then we'll be busy trading fees all in a big circle all day. Like that's not productive. You know, I think as long as everyone knows that they get out what they get back what they put out there, that you can do that in good faith, and I don't need to dip from you, so you dip back from me. We could just stay in our lanes and share.
And that works when everyone is strong.
Yeah.
You know, when you've no weak links in the chain, then everyone feels like even if they're giving more at that particular moment than they're receiving, they know that the game is long and they're going to get more, get further by sticking together.
That's right. And it doesn't take a big, you may get nothing all year, and then you've got one tough deal that's worth a big fee to you, and someone gives you the answer that clicks, and like, man, I made $100,000 because so-and-so answered my text message. Like, yeah, I'm going to keep putting into this system, and you're
not going to forget that.
No, and that's important, and that enables each person to get more business. Because if you came to me and said, "What would I do with as an example, a gas station in Portland?" I would say, "I have no idea, but I know there's a guy in my shop who's recently done 4 of them." Right, so I know I can take that business and monetize that relationship and that ask, right, based on his work, and he knows he'll have an opportunity to do that off my work at some point.
Amazing.
Full of great answers today.
Yeah, you're on fire. We're going to have a second episode, I think. Right? We're only scratching the surface. But listen, I know it's a busy time for you. We appreciate you coming in.
Absolutely.
If people want to get in touch or do business, what's the best way? And is there any obligation if I'm a borrower and I just want to talk to Andrew about the situation I have?
There's no obligation. We quote sales brokers on their listings. We interview buyers for them. We talk to individuals who are looking around in the market, looking at deals to help them understand where the pricing is. That kind of feedback. You guys are in the business, right? People call you all the time. What's the value? What are the cap rates? Where are rents? That's just part of creating relationships and adding value. We very much believe in leading with value. How can we add value? We would like to get paid, yes, but where can we add value? And it may not always be about mortgage data. It may be about, the general market or rates or a good sales broker to meet, that kind of stuff, which is also fine. Mm-hmm. We're only sending you to a sales broker if you didn't come from a sales broker, but besides that,
Right.
Yeah.
Great stuff. Mitch, anything else to fire in here? Mitch still has a page of notes to get through.
Wow.
We're going to have to come back.
I hope you have more coffee.
But
thanks, Andrew.
No,
we
it's
really
a pleasure.
appreciate
Thank
it.
you, Andrew.
Yeah, thanks, guys.
Cheers, guys.
Cheers.